Let's move on to another case study on operating leverage. A firm sells its product for 50 per unit. It has variable operating cost as 30 per unit and fixed operating cost as 5,000 per year. Its current level of sales is 300 units. You have to determine the degree of operating leverage. What will happen to EBIT if sales changes? That is, if it rises to 350 units and decreases to 250 units. Let's see. So the sales price per unit is 50, variable cost is 30, fixed cost is 5,000, and the current position is 300. We have to find out what will be the change in EBIT when the sales increase to 350 or it comes down to 250. So this scenario will call as base case. Base case because sales units are 300, and we have two scenarios or two cases when sales increases, sales decreases. If sales increase, we'll call this as case 1. Sales decreases, we'll call this as case 2. Right. Now let's analyze. First, we'll capture the sales units. In case 2, it is 250. Base case 300. Case 1, it is 350. Now let us analyze case 2 only. Sales units are 250. Sales revenue. What is the selling price? It is 50, right? So item number 1, that is 250 units multiplied by 50. 250 into 50, 12,500 is your sales revenue. From that you have to deduct variable cost. Variable cost is 30. So variable cost is item number 1, sales units multiplied by 30. 250 into 30, it is 7,500. So 12,500 minus 7,500 should give you contribution. We call this as contribution. 12,500 minus 7,500, it is 5,000. Now from this we have to deduct fixed cost. Fixed cost already mentioned in the question, 5,000. Let's deduct that. 5,000 minus 5,000, EBIT position is 0. This is for case 2. Let's do that for case 1, not case 1, base case. 300 units multiplied by 50. 300 into 50, that is 50,000, 15,000. Then variable cost. 300 multiplied by 30, 9,000. 15,000 minus 9,000, 6,000 is the contribution. Fixed cost is 5,000. So EBIT is 1,000. This is the base case. Okay. Then moving on to case 1. 350 units. This multiplied by 350 multiplied by selling price of 50. It is 17,500 minus variable cost. 350 multiplied by 30. It is 10,500. So your contribution 17,500 minus 10,500, it is 7,000. Fixed cost is 5,000. So your EBIT is 2,000. Okay, so we have done the basic calculation. Absolutely no additional efforts are required. Straightforward. Now comes the real analysis. We have to see what is happening to the EBIT, because our objective is we have to find out the change in EBIT when the sales increases, sales decreases. See, now look at the base case. From 300, sales has come down to 250. That is, sales is dropped from 15,000 to 12,500. So we can say there is a 16.7% drop in sales. That's what you can see here. Change in sales from base is 16.7%. It is a drop. Okay. But when there is a 16.7% drop in sales, what is happening to the EBIT? That's what we are concerned about, because question also wants us to find out the change in EBIT. When there is a 16.7% change in sales, EBIT has shifted from 1,000 to 0. 1,000 to 0. It means it is 100% fall. There is a change in EBIT downwards, 100%. For what? For 16.7% foreign sales. For very, very marginal drop in sales, there is a significant drop in EBIT. Now have a look at this case. Sales increased from 300 to 350. That is, from 15,000, this is going to 17,500. Again, this is a 16.666, so 16.7% increase in sales. So when the sales increased by 16.7%, we'll record that also. Change in sales from base 16.7%. What is happening to the EBIT? From 1,000, it is going up to 2,000. From 1,000, it is going up to 2,000. So it is a 100% increase in sales. Sorry, 100% increase in EBIT. So the change in EBIT is, here it was downwards 100%, whereas here it is upwards 100%. Why all this happening? It's because of the operation of operating leverage. If you look at the base case here, base case the contribution is 6,000 and your EBIT is 1,000. Contribution divided by EBIT will give you operating leverage. 6,000 divided by 1,000, you get operating leverage is equal to 6 times. And what does this operating leverage communicates? Understand, this operating leverage says that your EBIT will undergo a change. Your EBIT will undergo a change of 6 times when there is going to be a one-time change in sales. How? Have a look at this. Here your sales changed by 16.7%, right? And what is your operating leverage? 6 times. And what I am saying, your EBIT will undergo a change by operating leverage times. Your EBIT is say like 1,000, and what is your change in sales? It is 16.7%. 16.7% multiplied by operating leverage times, that is 16.7 multiplied by 6, it is 100. Your EBIT is going to change by 100%. Now you can vouch for that. 1,000 becoming 2,000, there is a 100% increase in EBIT. That's what this operating leverage tool helps us to find. Operating leverage says, or operating leverage will communicate how your EBIT will respond when there is going to be change in sales. In this case, sales increased by 16.7% multiplied by operating leverage. We can close our eyes and say your EBIT will increase by 100%.